In a bold move that set the finance world abuzz, Barclays has agreed to acquire Tesco Bank's retail banking business for a whopping £600 million. The deal is far from a simple buyout. It's a strategic alliance that's set to reshape the financial landscape. As part of the agreement, a decade-long partnership has been forged between Barclays and Tesco. This alliance is not just about sharing resources, it's about creating opportunities. Opportunities to distribute credit cards, personal loans and deposits under the well-established and trusted Tesco brand. Now let's talk numbers. Barclays is gearing up to take on a substantial financial portfolio. We're talking about £4.2 billion of credit card receivables, £4.1 billion in personal loans, and a hefty £6.7 billion in customer deposits. But it's not all about Barclays. Tesco isn't bowing out of the banking game entirely. The supermarket giant will retain its other banking activities such as insurance and ATMs. The proceeds from the deal, combined with a special dividend, will net Tesco a cool £1 billion, most of which will be returned to investors through a share buyback. So what's the bottom line? The pro forma annual adjusted operating profit for Tesco is expected to be somewhere between £80 and £100 million. With this deal, Barclays not only expands its financial portfolio but also cements a long-term alliance with Tesco. But what does this mean for Tesco and its shareholders? Tesco may be selling off its retail banking business, but it isn't exiting the banking sector altogether. Indeed, Tesco is maintaining its foothold in the banking world by retaining its insurance and ATM operations. This decision suggests that Tesco is not entirely stepping away from the financial industry, but rather shifting its focus to other areas where it sees potential for growth and profitability. Now let's talk numbers. The sale of Tesco's retail banking business to Barclays has fetched a cool £600 million. But that's not all Tesco is pocketing from this deal. A special dividend is also in the mix, pushing Tesco's total earnings from this transaction to a staggering £1 billion. What's Tesco planning to do with this windfall? A significant chunk of it is slated to go back to the stakeholders. Tesco is set to roll out a share buyback, a move that will likely resonate well with investors. After all, share buybacks often lead to an increase in share price, and who doesn't like to see their investments grow? On the profit front, the estimations are looking promising. The pro forma annual adjusted operating profit for Tesco is expected to hover between £80 million and £100 million. These figures suggest that Tesco's decision to sell off its retail banking business might not be as drastic as it initially seems. Instead, it appears to be a calculated move to streamline operations, maximize profitability, and enhance shareholder value. So, it's clear that Tesco is far from bowing out of the banking industry. The company seems to be reorienting its strategy, focusing more on its core business while still reaping the rewards of its financial operations. It seems Tesco is reorienting its strategy, focusing more on its core business while still benefiting from the financial sector. But what implications does this shakeup have for the broader banking landscape? When giants like Barclays and Tesco make moves, ripples are felt across the banking sector. The recent acquisition of Tesco Bank's retail banking business by Barclays is no exception. Let's delve into the potential implications of this move on the banking industry. First off, this acquisition is likely to cause shifts in the competitive landscape. Barclays' move to snap up Tesco's retail banking business is a clear indication of its ambition to expand its customer base and strengthen its position in the retail banking sector. This could, in turn, prompt other banks to consider similar strategic acquisitions to maintain their competitive edge. Secondly, the reaction of other banks to this deal cannot be ignored. In an industry that thrives on competition, the Barclays-Tesco deal might just be the spark that ignites a series of mergers and acquisitions in the banking sector. Banks may start looking for opportunities to acquire smaller banks or expand their services in order to stay relevant in this ever-changing landscape. Notably, the implications for customers are equally significant. With the Tesco brand continuing to be used for the distribution of credit cards, personal loans and deposits, customers can expect a seamless transition. Moreover, the amalgamation of Barclays' expertise in banking and Tesco's strong retail presence could potentially lead to improved customer service and innovative banking solutions. However, as is the case with any major shift, there may also be challenges. Customers might face uncertainty as changes in policies and banking procedures may occur. It would be prudent for customers to stay informed and adapt to any changes that might arise. In conclusion, Barclays' acquisition of Tesco's retail banking business is a major move that could have far-reaching implications on the banking sector. From shifts in the competitive landscape, potential reactions from other banks, to implications for customers, this deal is bound to have a significant impact. As the dust settles on this major acquisition, the next few years will reveal the true impact of this deal on the banking landscape.